I look at your LinkedIn profile, you're an Amazon engineer who has now very conversant with what jewelry women wear, right? How did that story of an Amazon engineer turning to a jewelry founder happen?
I think Amazon were a lot of time at hand. So I started exploring categories where the fundamental value add has to be higher. Looked at few categories. I think few categories stood out very clearly for me. One was grocery, where the supply chain is very, very, very differentiated. It's not just as simple as adding a tab there.
Sure.
Second was furniture, where also the supply chain is very, very different. And third was jewelry, where the supply chain or supply side as well as demand side was different.
Yeah.
I'm saying demand side also because I mean Shopper Stop has never been able to sell jewelry. Lifestyle has not been.
Correct.
So it's not that you have lots and lots of people coming to your website or your store and you put fine jewelry there and people will start buying from you.
Yeah.
So it doesn't happen, right? So the trust, the product offerings and everything on the demand side has to be built over time. It's not yet another category that you start selling.
So therefore, the competitive intensity would be different in nature here.
Would be different, and it will not be a capital game. It will not be a traffic game. It will not be an eyeball game.
That's a very interesting way of thinking about it.
It would be just very difficult to establish it, obviously. But once you have done it, it's not that for Flipkart some Snapdeal would come and suddenly you're both fighting for the price. It doesn't matter. Even when CaratLane and Bluestone were there, pricing never worked for us, or price cutting never worked for us. Price cutting never worked for them also, right? These are different products. It's not that both of us are selling the same product to the same customer.
Amazing. That's a very interesting lens to look at, that if I'm thinking of a new business, can an existing player just extend into this category, or is it fundamentally something different about it?
So that was the first lens, and few categories stood out. And then I looked at the size of the categories and other aspects of the categories, and I was actually taken aback when I looked at the size of the jewelry business.
I'm sure. Yeah.
It was bigger than electronics. All electronics subcategories combined. It was bigger than many of the other categories.
Bigger than financial services at one point, I think.
It was. In fact, in the offline world, I remember, I don't think, so yeah, DMart was there, but I think Tanishq market cap was more than DMart. Yeah. It continues to be.
Yeah.
In no other country that happens, right? Grocer would always be significantly bigger than the jeweler.
Correct.
In our country, the biggest jeweler is bigger than the grocer. You take another example, Tiffany, the brand everyone knows, has been around for 150 years. Eventually got sold for $15 billion. Tanishq, Titan had been around for, Tanishq had been around for around 30 years now, trading at between 35 to 40 billion market cap, right? And still, I believe not more than 6 to 8% of the market share.
Correct.
So plenty of headroom to grow. A lot of these things were visible at that time or evident at that time also. So basis those, I decided that this is the category to sell. And if you do any top-down math on such a large category, let's say 1% of it moves online, that's $1 billion. So the top-down math worked very well for us, given the size of the category. I think the biggest question was that would people buy it online or not? And then every startup has some unknowns, right? If everything is known, the big boys would do it anyways. So with that uncertainty, with that open-ended question, rest of the things like, okay, we'll figure it out. Right? We're first principle folks. I never entered a jewelry store before starting the category. I was not married, so there was no reason. Right? No man or no boy enters a jewelry store not till they get married.
Yeah. Or about to.
Or wanting
to.
Wanting to, I don't think. It'll help there. In fact, I just started speaking with my wife, and we just kind of started discussing the marriage, and said, "Oh, jewelry online, who will buy?" I think she's our happiest customer right now.
I love how candid you are about this. Through this whole journey, how has been your own personal finance journey? Like, a lot of your friends that we know in common are doing very well in jobs, etc. Like, would you think about that at some point of time?
So when I came out of my first venture, I had around 18 lakhs of debt. That was a life saving after 10 years after graduating from IIT. But I was never that money kind of, as in money minded kind of a person. I was savings kind of a person, let's say. I think after IIT, 1.5 years into the job, I had 10 lakh rupees in the bank account, which was the highest I'd ever had. I went and bought a car for 10 lakh. It was almost zero. It was kind of going towards zero all the time. Then in Amazon, I think there was some money in the bank account, maybe 20-25 lakhs, and it was just too much. So I quit the job and started doing whatever I wanted to do. And thankfully, not much changed after marriage also. So my wife was also like that. Okay, whatever we have, let's just spend it. And when it comes down to zero, then we'll think about what to do.
Sure.
So never. So whether my bank account had 10 lakh rupees or let's say 2 crore rupees, kind of never bothered.
Hmm.
Until it kind of came down to zero and ye ki kal kya karna hai.
Hmm.
So till that point is just generally I've never felt stressful because of that.
Hmm.
In fact, during that time that I was talking to you about 2017-18 time, I did not take salary for me and my co-founder Sudeep.
Hmm.
Both of us did not take any salary for 1.5 years, and my bank account was again down to 1 lakh.
Hmm.
So
Amazing. So,
so
you
yeah,
know-
1 lakh rupee in bank account is very, very common for me.
Throughout this journey, I've been drawing parallels. This is one area where I don't think we can draw a parallel because always have preferred to be comfortable. But how were you dealing with it at that time? Because, like you're a really young founder.
We had the time to execute what needed to be executed.
Yeah.
What needed to be executed. We had very strong supporters. When we started back in 2012, we started as an online only player. I think somewhere along in our journey, after 3 to 4 years, and we had a good traction. So online was growing at a good pace during that time, 2x, 3x, albeit on a small base. The growth was there. I think one of the things we were noticing was very, very, very low conversion rates. One of the biggest drop-offs was from the point when people were adding designs and products to their carts, to their wish lists, etc., but were not converting. When we spoke to a lot of our customers who bought, what made you buy from Bluestone? The number one reason, 86% people said because of designs. We liked the designs so much that we had to buy. 9% people said choices. 3% and 1% said price and convenience, which told us very, very clearly that's a product game and it's not a service kind of a game. It's not just an e-commerce game. In the same survey, we also noticed a big cohort of users adding to carts or adding to wish lists and who were spending 2 weeks, 3 weeks browsing lots and lots of designs on the website, but were not converting in the end. But then they said that how can we buy something so expensive without touching and feeling it? Was the number one reason.
And then in which case, how do you look at economics? Is the fact that you have to invest in the store because the store is a part of that trust building experience, how the store looks, feels, how it is organized, how people are dressing up in the store, like the salespeople. Like, is that all something that's important?
How much importance I give to those things, I give huge importance. Have I done a phenomenal job of those things? We have not. So our initial stores that we opened were, there was a store which was 200-250 square feet.
Yeah.
And jewelry, given the same thing. In fact, jewelry, you would see that people believe that open a big store because that big store gives you that big presence that makes people believe that you're a big guy, and hence you'd be. It's much easier to trust you. It's much more. It's much better to buy from you, right? So a lot of those things is not something that we have done because we have built it very bottom up. So as we kept on getting more and more confidence in our store's ability to generate revenues, we started plowing back parts of it into this long-term value building.
There are, when we were chatting earlier, you said that there are certain stores which have done much better for you than other stores have. And certain stores, bring up a large part of your revenue. What was the insight around, like, what kind of users are buying? Who are these users who are more keen on buying from Bluestone versus buying from another jeweler?
The cities where there's a lot of migrant population and the parts where a lot of that migrant population typically lives, we have a stronger online penetration there. For example, in Bangalore, we have stores in HSR, Koramangala, Sarjapur Road. There's a lot of people who are not from Bangalore originally stay. And then we have stores in places like Malleshwaram, New Bell Road, and the north part of the Bangalore, where a lot of people who are staying there have been staying there for generations.
Sure.
Right? And for Delhi, it would be the other way around.
Yeah.
So what we noticed was that at catchment areas where there was a lot of migrant population were doing much better for us. And we have a hypothesis around that also. And I think over time that hypothesis kind of kept on getting stronger and stronger. And that is that, see, for a very, very long time, jewelry was a category which was largely dominated by family jewelers or generational jewelers.
Sure.
So for generations, people did not change their jewelers. And that whole that whole affinity to one particular jeweler was built more on the fear of other jewelers than, let's say, the love for the same jeweler. I think for a very large part, it was generally percolated, or it was generally said that you cannot trust any other jeweler because that you don't know what's there in gold, you don't know what's there in diamond, etc. So if you buy from someone else, let's say, except me, which is, let's say, the big family jeweler, the family jeweler would typically say that if you buy from anyone else than me, then you don't know what you're getting. But with me, you know. And here's the cashback guarantee. That if you don't like it, return it and you will get the value back.
So first you create fear and then you give an incentive.
Then you give an incentive. So it's largely built on that. And see, this thing would work very well for as long as folks across the generations are staying in the same city, are staying in the same locality. Now, if you take a lot of these people and put them in a new city, they won't have a local or a generational jeweler to trust. And they would not trust the local jeweler from that city because that's the fear that was kind of pushed down upon all these people all this long. And hence they would typically tend to trust jewelers who are national in nature, who are beyond a single city, who are like chain stores. In our case, people that they've seen online also for a very long time, that they have seen in their cities also for a very long time. And in case of many other national brands, like I think Tanishq, Kalyan, Malabar, I think that will all work in their favor. So I think as people move from one city to other, the chain jewelers, the national jewelers would typically have an upper hand compared to the local jewelers.
So as urbanization is happening and mobility is happening within India, I think that's a very positive trend for Bluestone to play on.
I agree. And yeah, this is a very strong tailwind for almost all the national jewelers. In fact, there's another great insights there. Is the nature of the families is also changing. It's not just the place where they're living. It's not just the city where they've been living. It's the kind of families that are there. Now, as people move from cities, they also move from joint families to nuclear families. A lot of families are Ding families where women are also working. Even when women are not working, they have an independent point of view. They have an independent life. And they have different life occasions also. If you're living in a big apartment or an apartment in, let's say, Bangalore, Delhi, etc., around Diwali, you would have some 5-6 different parties in the same in the same apartment complex or in the same community. You would actually go meet up with your batchmates, your colleagues, etc. Right, and those will be evening outings. The kind of dresses you would wear in those occasions right now would be a lot more Western, much not that heavy. And the kind of jewelry that goes with that is also very different. That's not something that you would wear on your wedding. And your wedding jewelry is not something that you can actually wear for next 10 years, 20 years. And maybe the next time would be when your kids are getting married. When you can take your wedding jewelry out and wear it. And hence a lot of transactions that are happening now and a lot of post-wedding purchase that is happening right now is for a different kind of jewelry. It's for a different kind of design language, which is where we have a very strong play, and which is what we very strongly believe in. And hence we have generally stayed away from the whole traditional designs, which I think lots of jewelers, almost all the jewelers in the country are doing a very good job of providing traditional designs. But when it comes to designs for the new age women, I think it was just a kind of a side project for a lot of big jewelers, and they did not take it that seriously as we have done it.
Oh, very interesting. Your own industry is going through a lot of changes. Like, we recently did a newsletter on lab-grown diamonds and the impact of that on the jewelry industry. How do you think some of that will change what Bluestone does?
Yeah, so I think lab-grown diamonds they've made a significant impact in US markets. But then we also have to understand the nature of US market and Indian market. So in US market, typically when you talk about diamonds, you're talking about solitaires, which are like 2.2 carat, 3 carat kind of diamonds. And maybe 80-90% of the diamond jewelry is engagement ring. Right? So there it's a single product.
So diamond is the hero product.
Diamond is the hero. There's no design. There's just 3 prongs, sometimes 4 prongs to hold that diamond. And then the size of the diamond is the brag value of that diamond. And then came this product which said that, okay, instead of spending, let's say, $10,000 in this, you can get something which has exactly the same chemical composition and molecular composition,
Hmm.
and you can get it for 20% cheap.
Hmm.
Right? So it became a very objective kind of a decision making there.
Correct.
Because the product, everything was just
Yeah.
very simple.
It was still a diamond.
It's still a diamond.
Yeah.
Everything was very simple. Now, after that, what kept on happening was that real diamond prices came down because the competition, the real diamond prices came down by something, say 20%,
Yeah.
25%. But that lab grown
Hmm.
or that substitute actually went down by around 5x, 6x.
Yeah.
Right? So I don't know where it'll stop and what will happen, because something when that is 20%, 30% cheaper is still a substitute. Something which is like 1/10 of the price, is
Yeah.
that still a substitute? When you give
Yeah.
that to your fiance, will
Yeah.
she even say that? You understand
Yeah.
the
Yeah.
whole
Yeah.
the whole reason behind that diamond,
Huh.
buying that diamond, was the value of it.
Yeah.
You take the value away from it, then
Yeah.
it's a stone.
Correct.
So that was US market, and those were bigger diamonds. Now Indian markets have fundamentally behaved very, very differently. For example, Indians still buy their jewelry in gold.
Hmm.
If you go to US, no one buys their gold. Very few people would actually buy their jewelry in gold. It will largely be silver.
Yeah.
It would at times it would be stainless steel. It can be something else also,
Hmm.
right? So they are, but Indians have never shifted
Yeah.
to those materials. Secondly, solitaire itself is a very small category in India. Indians, when we talk about diamond jewelry, we're not talking about that big engagement ring. In fact, most of the women would not have that engagement ring, or would not have, let's say, a big chunk of their jewelry budget going into that ring, but it would actually be a lot of different designs. They would have jhumkas, they would have chand balis. I'm saying Indian jewelry is lot richer than Western or European,
and very
jewelers,
design
because
intensive.
Look at earrings. We have some 20, in fact not 20, we have some 50 type of earrings. For
Hmm.
anyone in Europe,
Yeah.
earrings are earrings. Just a stud is what they'll wear. Maybe drop.
I love how comfortable you are with this stuff. But
India, if you look at chand bali, jhumka, sui dhaga, just there'll be so many nuances.
Yeah, got it. So I think you're saying that is the differentiator, and therefore India will not be as impacted by artificial diamonds.
And the jewelry and the diamond that goes in that is typically very small diamond.
Yeah.
Now, when you come to that size of the diamond,
Yeah.
the cost price in natural and in lab grown is not that different.
Correct.
Right. So that cost advantage that lab grown had for bigger pieces is not there, first of all.
Right.
For smaller pieces, or the kind of jewelry that Indians wear.
Got it.
Right. So that way it's also very significantly differentiated. So it'll have to now. So I don't know how it's gonna play. It's I think it's a question that I keep getting up, so that people keep asking me, and I think everyone is clueless that way.
Yeah.
And people are trying to kind of mimic US market, but Indian behavior is not similar to US market. And I think for a short while, for that small cohort who are buying solitaire, it'll work. But any company who's trying to make a big game in it will very soon run out of the people who are actually interested in the solitaire in the first place.
Yeah. No, I think there's a lot of differences, and we can't copy paste one business model because the country situation, the market situation.
Plus, it's not electronics. That India is 1/10 the US market.
Yeah.
And whatever happens there will eventually come to India after 2 years.
Correct.
In jewelry, India is bigger than US. We are the leaders when it comes to design choices and so on.
Yeah. Yeah.
And the way we operate in that category.
Yeah.
We don't look westward.
Yeah.
And do this. It's not ride hailing.
Yeah.
They look at, okay, what's happening in US and let's do it in India. It's not.
Correct.
I'll not go to electric.
Like quick
I'll
commerce.
not go to electric.
Quick commerce hasn't done so well in the US, but in India,
it
it's
is
doing fascinatingly well. Gaurav, in your journey, you've had a whole set of investors. You had, for instance, I was reading up, Ratan Tata also invested in your company. How was the fundraising journey through this phase in what was back then a very unproven category?
Yeah, so our first round was in 2011, and that was overall around, I think 3 plus 1, maybe 4 or 5 million, somewhere around that. So in around 2014, we did our Series B, and 2015 Series C and 2016 Series D. So what had happened was, at that time, the online traction was pretty strong. So business was growing. And while, let's say that if you have a curve for 2 years, that does not mean that you'll continue the same curve for 20 years, but in presentation, at least it looks good and you're able to raise capital.
Yeah.
So I think first 3-4 years first maybe 4-5 years were easy for us. And the kind of investors we attracted were the hardcore tech e-commerce kind of investors.
Sure.
And everyone looked at this category as a very e-commerce kind of a category.
Correct.
That, okay, this is a huge category.
Hmm.
I think around 2015-16, we fundamentally started seeing that this is not something which will scale.
Hmm.
So as we try to scale it in its current form, it's going to become more and more inefficient. And it was evident.
But I can imagine the board meeting or discussion that
It
time you
was.
sold ki this will be an online only brand and so on.
And then
And
you say,
suddenly
"Yeah,
you're
we
going
are
and
not doing
presenting
it."
a different plan.
Yeah.
So how was that conversation?
Even if, let's say, my initial investors, even if they believe that, they say, Gaurav, fine, let's do omni-channel, they still can't put money because they also have ICs. They also have to,
Correct.
and everyone in their side, whether it's IC, whether it's partners, etc., they're all online investors.
Yeah.
So if we present them a plan that let's roll out 200 stores, they'll say, why should we fund it?
Yeah.
Right. So fundamentally, it's not easy for them also. It's not about what the person believes.
Yeah.
I'm saying the institution was not meant.
And everyone is answerable to somebody else.
Right. The institution was not meant to fund or to invest in offline businesses. Now, coming back to the same thing, omnichannel was not a term which was very popular at that time. So the moment you start talking to anyone about stores, they'll say you're an offline business. They won't say you're an omnichannel business. That understanding is developed very recently.
Correct.
So we were in a very, very tricky situation where we did not have sufficient money to play this game, let's say, for 1 or 2 years and to prove it out. Once you have proven, then no one cares about online, offline, or anything. Once the numbers speak.
Correct.
But in order for those numbers to speak, there are certain things that needed to be done which were in no man's land.
Yeah. Yeah.
So we took very hard calls. In fact, we cut down our organization salary costs significantly. So it was, I think, our manpower cost was around 4.5 to 4.8 crore a month, which we brought down to 1.2 crore.
Wow.
Our engineering team was around 40 people strong. We brought it down to 5 people.
So you dropped costs
zero
by
people, 0% in marketing team, 0% in product team. So 80% drop in cost, so that capital that we have would support us for longer.
And this was, what year was this again?
This was 2017.
And so 6 years
so this is what happens when you actually take those calls. As it is, we were non-fundable.
Yeah.
After this call, we were like totally non-fundable.
Oh.
For a very long time, till the numbers start showing up. And we were aware of that. But this was the poison pill that we had to take in order for us to survive, because that thing would have it would have run out of gas at some point in time. And so for 3 years, we did not make any noise. We just
kept your heads down.
Kept our heads down and kept on building, and then the numbers started showing up. And then,
but in the 6th year of your journey, you're giving up an existing line, like the way of doing business.
Not giving up. I'm saying all those things. And I'll again go back to that survey. I kept on saying omnichannel, not offline. I'm saying the world said that you are doing offline.
Yeah.
All I was saying is I'm already generating so much traffic.
Sure.
I'm already converting.
Yeah.
A part of it. And there's 30 times more people sitting on the other side.
Yeah.
And I need to do something which happens to be called a store. I wish it was called something else.
Yeah.
And I wish I could do it online.
Yeah.
But that was not the case.
Yeah.
Another example is, let's say, cars. If any of us is looking to buy a car today, we'll do a lot of our research online, right? It's not like 20 years back that you're thinking of buying a car and then you would start visiting dealerships or you would start calling your friends, right? In today's world, if you think of buying a car, your first port of call would be internet. You would actually pull out your mobile. You would start searching cars in that particular range. You would go to cardekho.com, you'll go to carwale.com, you would compare lots and lots of models, you will consume their photos, you will consume their reviews, do a lot of research online. In fact, a lot of decision making would actually be happening online. But let's say if Cardekho or Carwale have a buy now button, would you actually click that button? Possibly not.
That's right.
For most of the people, the answer is no, and that's why they don't have that button.
Right.
What you do is, even after making up your mind between 2 or 3 models, you still go to the dealership, you go talk to the salesperson, you ask that salesperson questions that you already know the answers to, right? You build that comfort, you enjoy that experience.
Interesting.
And then you make the purchase. Now, in this particular case, there's not a single company that's providing both the legs of the experience.
Yeah.
But I'm saying the experience fundamentally is omnichannel.
Yeah.
There's offline dealership that provides the offline experience. There are online portals who do a very good job of providing the online experience. but the customer behavior is omnichannel.
Yeah.
Now, any car model or any car company which has great reviews online, which has great photos online and great online presence, but has no dealership, will end up doing bad in today's world.
That's right.
And vice versa. A great car, let's say a very strong dealership network, but very bad reviews, very bad photos online, that company would also not do good.
Yeah.
Right. So it's just, I'm saying the categories, high touch categories, high experience categories, where the customer experience fundamentally is omnichannel. Now, in some categories, there are different companies, different parties providing that experience. In categories where that experience is not provided by some other party, any company that intends to do well in today's world will have to do the whole 9 yards themselves.
It's been a fascinating conversation, Gaurav. Really enjoyed it. I think we've learned a lot about how to build in a new category where trust is a big determinant, multiple channels all at the same time. I think we're all smarter for it. Thank you so much.
Thank you, Sandeep.